Good afternoon, students. Welcome to Accounting 1303. This is Introduction to Accounting 1. My name is Mrs. Mercado, and this is a supplemental lecture on Chapter 5, which deals with adjusting entries and the worksheet. I've already posted another video that deals with solving problem 514. That's a comprehensive problem on completing a worksheet and doing adjusting entries. That problem that is covered in that other video, which is problem 514, you're going to have something similar to that on your test. I went ahead and I've selected 2 additional problems to cover dealing with chapter 5 to help you prepare you. One of the additional problems that I'm going to be going over today, which is exercise 510, will also be on your test. That is why I'm taking the extra time to explain that as well. Okay, so I've selected 2 exercises. One of these exercises, once we get to it, I'll let you know which one it is. Well, you will also see on your upcoming test number 2. It's very important that we understand how to do adjusting entries. Okay, now I am not going to go over the concepts over chapter 5. That's your responsibility to read chapter 5, and I've gone over some of that information in my other video. In this particular lecture video, just for time constraints, I'm just going to jump into solving 2 of these problems. That way you can have a supplemental resource to be able to help you with your homework and your test. Okay, so the first problem that I'm going to do is exercise 5.4, which deals with adjustments for depreciation of assets. Okay, so this problem states, on December the 1st, delivery equipment was purchased for $7,200. The delivery equipment has an estimated useful life of 4 years, which is equal to 48 months, and it has no salvage value. So that basically means that we're going to depreciate it to the very end. We are expecting that by the time that we are done, by the time the 48 months pass by, this particular asset, this delivery equipment, will have no value in our books. Okay, that's what no salvage value means. Using the straight line depreciation method, analyze the necessary adjusting entry as of December the 31st, and they're asking us to do the adjustment for 1 month using T accounts, and then formally enter the adjustments in the general journal. Okay, so the first thing that we need to do is figure out our monthly depreciation. Okay, so to do that, it's usually the amount of the asset. In this case, it was $7,200. Okay, minus any salvage value. In this case, we don't have a salvage value, so we just have $7,200 asset. If we had a salvage value, we would have had to subtract the salvage value from it. In this case, we don't have a salvage value, so I'm just going to get my $7,200, and I'm going to divide it by the number of months. Okay, so we are estimating that this delivery equipment is going to last me 48 months. Okay, so then that is going to give me, let me get my calculator, 7,200 divided by 48 months. So that means that every month that we use up this delivery equipment, we are going to depreciate it $150. Okay, so that is my monthly depreciation expense. And I misspelled depreciation expense. Here we go. So every month that we use the asset, we're going to have to do an adjusting entry at the end of the month to depreciate it $150. Now be very careful, because in this example, we don't have a salvage value. If we had a salvage value, let's say for example, and this is just on the side, let's say for example, my salvage value was $200. So we would get the 7,200 minus my salvage value, and then you would divide that by the number of months. Okay, so just be very careful. If you have a salvage value there, you have to adjust it. Okay, in this case, we didn't have a salvage value, so we just got the amount of the asset divided by the number of months. Okay, and that is how much we're going to depreciate. Okay, so now that I know that my monthly depreciation is $150, they're asking us to record this information into T accounts. Okay, when we depreciate, there's an entry that's done to an account called the depreciation expense, and that is basically to keep track of your depreciation for that specific asset. And then we have accumulated depreciation. That is the account that accumulates all of the depreciation for the life of the asset. Okay, so The depreciation expense, that's a temporary account that gets zeroed out every year. So what happens is we accumulate information for a year. At the end of the year, we zero it out and we start fresh. Okay. Accumulated depreciation, that's a permanent account. We never zero out that account. So year over year, we're going to be accumulating information. Accumulated depreciation is a contra asset account, and we use this information to calculate our book value. Okay, so whenever we depreciate an asset, our entry consists of debiting depreciation expense and crediting accumulated depreciation for the specific asset. Okay, so in this case, these are adjusting entries. Okay, so to be able to classify this, I'm gonna go ahead and I'm gonna label them as adjusting right here. Okay, and I'm gonna label it over here. Okay. No. Now, by now we should be familiar. Whenever we have an expense account, the normal balance of an expense account is a debit. Okay, so the normal balance of expense account is a debit. Okay. The normal balance of a contra asset account is a credit. Okay. So we figured they're asking us to do an entry for 1 month of depreciation. The monthly depreciation is $150. So that means I am going to debit depreciation expense for $150, and I am going to credit accumulated depreciation for $150. Okay, remember, debits must equal credit. So I have one debit, one credit. Okay, let me copy this down, that way I can reference it, because then some students might get confused. So that would be my debit, that would be my credit, that would be my debit, and that would be my credit. Okay, that way we are clear on the columns. Okay, so it's very important that we know our normal balances of our accounts. Whenever we see an expense account, we're always going to debit. When we see accumulated depreciation, that's a contra asset account, and we will always credit it. Okay. Now, after you've recorded this entry in your T account, then you can transfer the information over to your journal. Okay. Now, they're asking us to do the entry as of December the 31st. Okay. So before I even start with my general journal, okay, this is your general journal. Okay. Before I even start, I'm going to go ahead and I'm going to label this at my adjusting entries. Okay. That way I know that all of the entries in this journal are going to be adjusting entries. Okay. For purposes of this problem, we only have one adjusting entry, so we're going to go ahead and record it. And this is as of December the 31st. So all we basically have to do is we have to copy whatever we did on our T accounts. So what did we do? Well, we debited depreciation expense for the delivery equipment. Okay. And that was for $150. And we credited accumulated depreciation for the delivery equipment for $150. Okay. So now we were able to journalize the entry for the monthly depreciation of our delivery equipment. Okay. So this represents the information on a T account, and then once you do it here, just transfer it over to your journal. Okay. So that's fairly simple. Okay. Now, this upcoming problem is the one that you're going to have something similar to on your test. Okay, so this problem deals again with adjusting entries. This chapter focuses on the worksheet and adjusting entries. Okay, so in this particular problem, they're asking us from the adjustments column in exercise 5.9, journalize the 4 adjusting entries. Okay, I have not solved problem 5.9. And I really don't even need to solve problem 5.9, but I'm going to use the worksheet that they provided to us here. Okay. So, using this information, we have to figure out the adjustments. That's what we're going to have to do. Okay, so I'm not going to solve exercise 5.9. I'm just going to use the worksheet to solve 5.10, which is we have to figure out our adjusting entries. Okay, so instead of completing the worksheet, I'm just going to work with what I have. Now, what I'm going to do is I'm going to compare my trial balance to my adjusted trial balance. Okay, if my numbers are the same, then there is no adjustment. If my numbers are different, then there's some form of adjustment that needs to happen. Okay, so that's what we're going to have to do. We have to figure out if there's an adjustment that needs to happen. Okay, and if so, by how much. Okay, so I'm going to start off with cash. Okay, cash started off with 100, ended up with 100, no adjustment needed there. Okay, now I'm going to go to supplies. Okay, I had $850 of supplies to start off with. I ended up with 200. Okay, so what does that tell you? Okay, so that tells me I started off with 850 and I ended up with 200. So that means that I used up $650 of supplies. Okay, so I used up $650 of supplies. What entry do I need to do to record the use of my supplies during the period? Okay, so by now we should be familiar. Okay, your supplies is decreasing. Okay, so what's going to happen here? Okay, this is all happening as of December the 31st. Okay, so your supplies is decreasing. Okay, so your supplies is going down. I'm going to go ahead and because your supplies is decreasing, I am going to credit. Now it's very important that we know supplies is an asset. Okay, so let me write that here. Supplies, okay, supplies is an asset account. Okay, a debit increases it, and a debit increases the balance, a credit decreases the balance. Okay, by now we should know this. I'm just putting this for reference. Okay, so what happened to my asset account? It decreased. So because it decreases, I have to credit my supplies account. Okay, so my supplies decreased by how much? Well, excuse me. We had said it was 850 minus 200, so my supplies decreased by 650. Okay, so what happened to my supplies? Did they vanish? No, I used them up. So usually when you use up your supplies, you expense them. It's an expense to the business. Okay, so let's look at our supplies expense account over here. Okay, I didn't have a supplies expense. It was zero. Okay, well, what do I have here? I have a debit now of 650. Okay, so what happened to your supplies expense? Your supplies expense increased by 650, which is correct. Now you're recording that, you know what, we used up $650 of supplies during the period. Now supplies expense is a supplies expense is an expense account. Okay, a debit increases it, credit decreases balance. Okay. Okay, so what happened to your supplies expense? It increased. You went from having 0 to having 650. So I'm going to go ahead and I'm going to debit my supplies expense account for 650. So you basically have to figure or find the match. What is matching with supplies? Well, if your supplies went down, well, where did they go? Well, they went to my supplies expense because now I used it. Okay, so supplies expense gets debited, supplies gets credited. Okay, now let's look at prepaid insurance. Okay, prepaid insurance is an asset. So you've paid in advance for your insurance. You had 900. Now you only have 300 left. So that means that you used up 900 minus 300. You used up $600 of insurance. Okay, so what's going to happen? The same thing's going to happen. Okay. Prepaid insurance is an asset account. Okay. A debit increases it, increases the balance. A credit decreases the balance. Okay. So what happened to my insurance, prepaid insurance? It decreased. We went from 900 to 300. So my prepaid insurance decreased. So because my prepaid insurance decreased, and I misspelled credit here, guys. Okay, so because my prepaid insurance decreased, I'm going to credit the account. And that was 900 minus 300. That means that I used up $600 of insurance. Now, what am I going to offset that against? Well, let's look down here. We have an insurance expense account. That account used to have a zero balance. Now it has a $600 balance. Okay? So the offset to my prepaid insurance is my insurance expense account. Okay? What that insurance expense is telling me is that during the period, I used up $600 of insurance. That's how much I paid for my insurance for that period. Okay? So insurance expense will get debited. Prepaid insurance will get credited. Okay? Delivery equipment, that balance did not change. Now let's look at our accumulated depreciation. Okay, I have a credit balance of 600 and over here I have a credit balance of 800. So my accumulated depreciation increased. Okay, so accumulated depreciation. Okay, this is a contra asset. Okay, a debit decreases the balance, the credit increases the balance. Okay, so what happened here for my accumulated depreciation? I had a credit of 600, now I have a credit of 800. So a credit increases your balance. So I'm going to go ahead and I'm going to do my entry for the 31st. So I have my accumulated depreciation. Your balance went from 600 to 800 credit. So what do you have to do? Well, I have to credit my accumulated depreciation, the extra $200. And this is for what? For delivery equipment. Okay. So I am going to, how do I get from 6 to 8? Well, it increased. I have a credit and I have a credit. So I went from 600 to 800. So then that means I have to credit the account an extra $200. Okay. So what does that mean? That means that I used up my delivery equipment and we depreciated it during the period. So every time we depreciate, just like we did it over here, we have to debit our depreciation expense account. Okay, so let's look at depreciation expense. My depreciation expense for my delivery equipment, my beginning balance was a 0. Okay, now my balance is 200. So that means that I recognize depreciation for the period of $200. So I'm going to have here depreciation expense for delivery equipment for $200. So this is like a puzzle. You have to figure out, okay, if something increase or decrease, what is the offset? Okay, and the offset, you're going to find it within the same worksheet. Okay, so that was for my accumulated depreciation. Okay, now let's look at your wages payable. Okay, you had 0 in wages payable, and then you have a credit of $100. Okay, so what does that mean? That means that my employees worked, and I owe them $100. Okay, I didn't pay them. I put it into a payable. I'm going to pay them at a later point in time. The employees worked, so they've earned the money. It's just that I haven't cut them a check yet. Okay, so this is wages payable. Okay, wages payable is a liability. Okay, a debit decreases the balance. A credit increases the balance. Okay, so what happened to my wages payable? Okay, I went from 0 to 100. So my balance increased. Whenever your balance for your wages payable increase, and I misspelled increase here. I'm sorry about that. Okay, here we go. When your wages payable increase, you credit the account. Okay, so I'm going to go ahead and I'm going to credit my wages payable. And that was, how much did we increase? We had 0. Now we have $100. So my wages payable increased by 100. Okay. Now let's look what we're going to offset it against. Okay. Well, let's look at our wages expense. I used to have wages expense of 600. Now I have wages expense of 700. So your wages expense increased by $100. So how do we increase? So wages expense is an expense account. A debit increases it, increases balance. A credit decreases the balance. Okay. So in this case, my wages expense increased from 6 to 7. It increased by $100. So because it increased, I'm going to debit my wages expense account by $100. Okay. So remember, you always have to have a debit and a credit. Okay. And then we go through the rest of the worksheet. The capital account stayed the same. The repair fee stayed the same. Now let's look at wages expense. We went from 6 to 700. We've already recorded my wages expense down here. So that's been taken care of. Okay. Advertising expense was 200 and we kept it at 200. So there's no adjustment there. Supplies expense, we went from 0 to 650. My supplies expense entry was done over here. Okay. Insurance expense was 0, and then we had an ending balance of 600. So we had insurance expense right here of 600 that we've already accounted for. And then depreciation expense, we had 0, and now we have 200. So that has been recorded as well. So now we have 4 adjustments that were done. It affected 4 of my accounts, either my asset, or we had 3 assets: supplies, prepaid insurance. This is a contra asset, and then a liability account being affected. And we are recognizing the expenses for each. So expenses will always be debited for the amounts of my adjusting entries. Okay. So it's a puzzle. Remember, if something goes up on one side, then you have to figure out, well, what's happening on the other side? What other account is being affected? Okay. So you always have to figure out. Adjustments are being done to update our books and reflect the correct balances on each of our accounts. At the end of the month, did we pay our employees? If we did, awesome. If not, we have to set up a payable. Did we record the use of our insurance? Did we account for the supplies that were used? If we had prepaid rent, did you account for the rent that was used up this month? Adjustments happen every end of month, so you have to be aware of all of the entries to be able to record your end of period adjusting entries. Okay. And remember, let me cut and let me paste it down here. Whenever we have adjusting entries, we have to label them. I believe the system in Cengage does it for you, but it's just a matter of adjusting entries, of labeling your entries. That way we know that these 4 entries are our adjusting entries. Okay. So you're going to have something similar to this on your test. Make sure that you're able to analyze, compare. Remember, if the balance from your beginning trial balance to your adjusted trial balance stayed the same, no adjustment is needed. If your balance either went up or went down, then you have to figure out, okay, what happened here? And that is where you have to record your adjusting entries. Okay. So this problem is going to be something similar to that on your test. You do have a problem like this on your homework, so you can practice. And if you have any questions, please feel free to contact me. That way you can get your questions clarified and you can be prepared for your test. Okay. So those are the 2 extra problems that I'm going to be going over chapter 5. Best of luck in your homework and stay safe. Thank you.